I was looking at DXY and now
Yep.
I'm looking at other pairs. And
Yep.
you find like, let's say you're looking at gold DXY and you just see DXY is buying at the same time as gold. And I'm like,
Yep.
this is confusion. So I have tried also to to avoid to like confirm a lot on DXY because I mean like this thing should be selling.
Yep.
Actually, even today, how let's say then I find myself also looking at how gold is buying. USD card is also but at the same rate and DXY is also. And I was like, what is this? This is now, are they not supposed to follow this pair, which is DXY, and like it dictates how these other pairs should.
Yep.
So I tried to limit how I incorporate DXY because I felt like I don't enter trades because I have over analyzed the way
Yep.
we Mhm.
Yep. So now regarding this, sometimes we have something we call a cracking correlation. Now, what a cracking correlation simply means when DXY is supposed to be moving opposite to, let's say, USD card. It's supposed to be moving the same direction with USD card. Now you see DXY is going up and the USD card is going down. Now you're wondering, it's this is part of the manipulation they use to
Ah,
wipe us out because when we see DXY going down, what do? We rush in and we start buying gold. We rush in and we start, if DXY is going down, we rush in and start selling USD card.
yeah.
So how I use DXY to do analysis is I'm more focused on the higher time frame of
Mm,
where DXY is going. So, for example, if I go to weekly, monthly, and daily, and I see that DXY is bearish, that means in the long term, I'll be looking for sales on USD card. I'm not going to try to correlate them too much.
everything. Yeah.
The only two pairs you can correlate like this is DXY against against Euro US dollar. These are the only two you can correlate back to back.
Euro USD and DXY.
DXY, if DXY is going up, Euro is going down. If it's going down, Euro USD going up. These are the only two I can recommend you can correlate them back to back, even on the 4 hour, 1 hour. But try not to go towards those. Even I wouldn't even recommend going to 1 hour. You can stop at 4 hour, correlate at four
Yeah.
hour.
Yeah. Yeah.
Use
Yeah.
1 hour as entry, 30 minutes entry, 15 minutes entry. Don't do analysis on 1 hour. Just focus on just 4 hour daily, weekly. The reason I'm saying this is because I didn't really understand trading for a very long time. And what made me realize my biggest flaws was when I stopped focusing too much on the lower time frame and I focused on the higher time frame. And I saw how easy it was.
Mm.
And when I started doing and replicating and now started making money. So a lot of people, when I now tell them, oh yeah, I want this pair to do this, I want it to go there, they're like, wow, how did this guy get it right? How is he getting it right? How is he making it so simple? They don't realize that the higher time frame makes it so easy to
Mm.
understand.
Mhm.
Once you go there, you see 12 months is creating higher highs and higher lows, showing you the blueprints. I'm bullish.
Yeah. 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 Yeah.
Like you can't go wrong. You
But people
can't.
avoid it because people want to like enter like the 15 minutes where they do the work. So they they just want to focus on that.
Yeah, so people like to focus too much on the lower time frame, and that's part of the reason why we have over 90% of traders quitting blowing accounts. But if you focus on the higher time frame and see the higher time frame bullish, now start looking for key levels where you can buy. Even if you buy and take a loss, that's okay. Wait for another one. Even if the next one goes to stop loss again, chill. The market will still eventually give you that trade. And when it gives you that trade, you see that you make back money that you lost and you make profit as well.